What if I told you the secret to building a billion-dollar real estate empire wasn't about buying property at all? Donald Trump didn't just build buildings, he built a psychological weapon. A brand so powerful, people paid extra just to put his name on their walls. He turned debt into a strategy, bankruptcy into a bargaining chip, and his father's fortune into a launch pad most of us never even knew existed. Welcome to Curious Cortex. Today, we're pulling back the curtain on the real strategy behind Trump's billions. Not the tweets, not the politics, the untold real estate playbook that changed the game forever. How Trump made billions, the untold strategy. Part 1, the foundation. It wasn't starting from zero. Let's start with a myth. Trump built himself from nothing. The truth, far more interesting. Donald Trump's real estate journey began not with a loan, but with a system. His father, Fred Trump, was already a millionaire developer by the 1940s, thanks largely to New Deal housing subsidies and FHA loans. But here's where psychology meets strategy. Fred didn't just give Donald money, he engineered a wealth transfer machine disguised as business. How? Ground leases. Before building apartments in Brooklyn, Fred bought the land through his company, then donated it to a trust with Donald as the beneficiary. Result? At age 3, Donald started receiving $60,000 a year for 99 years. Not a gift, a contract. Then came the corporations. Fred would create empty shell companies, build government-funded housing, then gift the shares to his children, often paying minimal or no gift tax. By the time Donald joined the family business in 1968, he wasn't starting from scratch. He was stepping into a pre-loaded financial ecosystem. Psychology break. Why does this matter? Because Trump learned early, perception is leverage. If people believe you're wealthy, they lend you money. If they believe you're successful, they pay premium prices. And if they believe you're unstoppable, they hesitate to challenge you. Part 2, the 3 pillars of the Trump strategy. Pillar 1, leverage. Other people's money, other people's risk. Trump's first masterstroke? Debt as a weapon. He didn't avoid loans, he weaponized them. Take the Commodore Hotel in 1976. New York City was nearly bankrupt. Real estate prices had crashed. Trump saw opportunity. He partnered with Hyatt, secured an unprecedented 40-year tax abatement worth over $160 million, the first ever for commercial real estate in Manhattan. Then he borrowed heavily to renovate. When the Grand Hyatt opened in 1980, it wasn't just profitable, it was proof that Trump could turn decay into gold. But here's the untold twist. When projects failed, and they did, Trump didn't panic. He used Chapter 11 bankruptcy not as surrender, but as renegotiation. His casino empire in Atlantic City filed for bankruptcy 4 times. Each time, bondholders were forced to accept less, while Trump retained control, licensing fees, and his personal brand. As one analyst put it, he got money for selling his casino hotels, while investors got real estate with greatly diminished tax benefits. Trump treated bankruptcy like a reset button, not a failure. And in real estate, timing that reset during market downturns, that's how you turn losses into leverage. Pillar 2, brand as a value multiplier. The name is the asset. Now the real genius move. In the 1990s, after the casino crashes, Trump pivoted. He stopped owning most properties and started licensing his name. Think about that. A developer in India wants to build a luxury tower? Pay Trump a fee to call it Trump Towers Pune. A hotel chain in Panama? License the brand, pay royalties, and handle all the risk. This asset-light model meant A. Trump earned millions in licensing fees, B. Zero construction risk, C. Zero debt liability if the project failed, and the branding, relentless. Gold Trump letters on every tower. Luxury positioning even when units sold below market average. Psychology break. Why did people pay for the name? Because Trump mastered aspirational identity. Buying a Trump property wasn't just about square footage, it was about buying into a story, success, power, exclusivity. That story had value, and Trump monetized it globally. By the 2020s, licensing income became a core revenue stream, reportedly over $8 million annually, even as some physical properties struggled. Pillar 3. Media mastery. Controversy is free advertising. Here's the third pillar most analysts miss. Trump understood that attention is asset value. Long before social media, he fed stories to tabloids. He positioned himself as the authority on Manhattan real estate. He created artificial scarcity. These condos are selling fast, driving urgency, driving prices up. Even negative coverage worked in his favor. Scandals kept him in the news. News kept his brand visible. Visibility kept demand alive. When The Apprentice launched in 2004, it wasn't just a TV show, it was a global branding engine. Suddenly, Trump wasn't just a New York name, it was a worldwide symbol of success. And that symbol? It printed money through licensing deals across continents. In real estate, perception drives price. Trump didn't just build properties, he built narratives. And narratives, when scaled globally, compound like interest.
So what can you learn from this, whether you're in Mumbai, London, or Sao Paulo? Lesson 1. Leverage local incentives. Trump used U.S. tax abatements and FHA loans. You look for your country's development grants, green building subsidies, or tourism incentives. The strategy isn't about the policy, it's about spotting the gap between regulation and opportunity. Lesson 2. Brand before building. You don't need a skyscraper to start. Build a reputation for quality, exclusivity, or innovation first, then license that reputation. A cafe in Bangkok can become a brand others pay to replicate. That's the Trump model, scaled down, scaled globally. Lesson 3. Use downturns as entry points. Trump bought 40 Wall Street for pennies during the 1990s crash. He renovated, released, and multiplied its value 50x. Recessions aren't threats, they're inventory sales. The key? Have dry powder, cash or credit, ready when others are forced to sell. Lesson 4. Separate ownership from risk. The licensing model is genius for emerging markets. Partner with local developers who know the regulations. You provide the brand, the design standards, the marketing. They handle construction, permits, operations. Shared upside, limited downside. But let's be clear, this strategy wasn't without consequences. Trump's aggressive use of bankruptcy left investors, contractors, and small businesses holding losses. His branding sometimes outpaced reality. Some Trump properties underperformed, leading to lawsuits from buyers who felt misled. And in 2022, a New York court found the Trump Organization liable for inflating property values to secure better loan terms, a case that resulted in significant fines and restrictions. Psychology break. Why do people still follow the playbook despite the risks? Because success bias is powerful. We study the winners, not the casualties. Trump's story is compelling because he survived the crashes, but for every Trump who turned bankruptcy into leverage, dozens of developers disappeared. The lesson? Strategy without ethics is a short-term game. Long-term wealth requires trust, and trust is harder to license than a name. So, how did Donald Trump make billions through real estate? Not by being the best builder, not by avoiding debt, not by starting from zero. He made billions by understanding 3 universal truths. Leverage amplifies capital, but only if you can negotiate when the tide turns. A brand can be more valuable than brick and mortar if you protect its story. And attention is currency, and controversy, when managed, can be invested. His strategy wasn't magic, it was psychology,
timing, and relentless execution. And here's the final twist. You don't need to be Trump to use these principles. You just need to ask, what's my ground lease? What's my brand worth to someone else? And when the market crashes, will I be the one buying or the one selling? If this deep dive sparked your curiosity, subscribe to Curious Cortex. Hit the bell because next week we're uncovering the psychology of conspiracy theories, why smart people believe weird things. Drop a comment below. Which Trump strategy could work in your country? India? Brazil? Nigeria? Let's discuss. Until then, stay curious. And remember, the strangest truths are often the most useful.